goes from journals to ledgers, just like we have always done. We have a little bit of different slant. We have a few little extra things that are included in there, but basically the foundation in 1 through 6 is what you're going to continue to use. Those are your procedures. That's your foundation. All right, so we're starting with looking at a new kind of store. It's called a sporting goods store. Max Ferrero is a sole proprietor still. We're still working with sole proprietors, but he's got a merchandising business instead of a service business. So he's selling things. It's a retail business, meaning he sells to the general public, to the people that are actually going to be using the product. We've got, and this is an introduction to the kinds of journals we're going to learn to use. We have a journal called the Sales Journal. In the Sales Journal, we record only thing that gets put in the Sales Journal is if you have a sale of merchandise on credit, meaning, what does that mean?
That means they haven't paid us yet.
It means they have not paid us, so that means we create a accounts receivable because they didn't pay cash. So anything that comes in, any purchase, anybody that buys from us on credit goes in the Sales Journal.
So where does it get posted if they pay cash?
In the Cash Receipts Journal.
Okay, gotcha. Okay.
Okay. So then we also have a Purchases Journal. And these two journals, I'm sorry, what's that? Yeah.
I didn't look far enough. I'm sorry. I didn't mean to interrupt.
No, that's okay. That's okay. The Sales Journal records sale of merchandise on credit, meaning accounts receivable are involved. Purchases, only purchases on credit.
Accounts payable.
Accounts payable.
Accounts
right.
payable.
Accounts payable. So these two journals deal with recording entries of anything that we didn't get cash for, okay? Not anything, because these kind of purchases are only purchases of goods that are to be resold. Selling merchandise to the customers that didn't pay cash, so we end up with accounts receivable. And this is what we purchase to sell to the customers on credit, meaning we created accounts payable. That's not like buying something on credit like equipment or anything else. Purchases are considered part of your inventory that you're going to resell. All right. Another journal we're going to learn to use is cash. This is chapter 7. This is chapter 8. This is chapter 9. So we're spending time on each one of these journals. They're very, very similar. The procedures are almost identical for using all of them. So once we get the first one and the procedures down, the others are just done the same way. You just got to remember what kind of entry goes into it. So cash receipts, anytime cash comes in, any cash, no matter what it's for, no matter what it's for. If it comes in and it's check, cash, or credit card, or money that comes in that we can go put in the bank, goes in the cash receipt. Okay? Cash payments, anytime, for whatever reason, we write a check to pay something. If we write a check, this is like your check register right here. You write a check for it, and it's going out, it goes in the cash payments journal. That's another journal. And then we've got the old handy-dandy general journal that you already know how to use. And the general journal now will only get the entries of anything that doesn't fit in the other 4.
So we'd start doing our expenses on the cash payment journal?
If you pay cash for them, yes.
Or we write a check for them?
If you pay cash, cash gets paid out. We're going to go in our cash payments journal. These are chapter 9. 7 right now, we're going to deal with sales journal.
Okay, so we're just starting with 2.
I'm just telling you about these journals.
Oh.
Yeah. 7, 8, and 9. Don't panic on me. This is the future. Just so you know, we're going to be using them. thing that's going in the general journal is anything like, for instance, it would be things like a sales return and allowance, sales return, somebody returns something where it doesn't involve cash or anything, but it doesn't fit in any of the other categories, so it's got to go. Your adjustments are still going to go in your general account. Your closing entries, right? Because they don't fit anywhere else. So, okay. Now let's just see. In the ledger, in our ledger, we've been dealing with just one kind of ledger, the general ledger. Well, now we're going to have an accounts receivable ledger instead of accounts. Now, what can you figure out why we would need this accounts receivable ledger? What have we been doing with accounts receivable up to now?
It's been going.
Stick them all in what? Somebody said, stick them all in the accounts receivable account, right?
Right.
But but those people owe us money, and there may be 1,500 of them, different people.
They'll be
Sure,
individualized.
they pay us. How do we? Go ahead, Connie.
Won't we make a separate ledger now for each account?
Yep. So what happens is, each one of our accounts receivable is going to have their own little sheet of paper with
Ledger
their
sheet.
name on it. We're going to write down that they owe us money. And then at the end of the month, we're going to look at these, who still owes us money, and send them a statement, right? Because we want to be sure they pay us. Before, we just lumped them all into one big account because you were just learning about the transaction. Now, as we got to keep up with these people, don't we? We can't just trust them. Oh, they'll send us their money, right? We had to go hunt them up. We'd have to go through that big old account and look for them everywhere in that accounts receivable account. So what they have their own, just like Visa and MasterCard, they got an account on everybody, don't they? You get your statement, it shows what you bought, so paid on that account. Same thing with this.
Set credit, check credit.
Just tear up the credit card. Right. So we got accounts receivable. Okay. And those are the people that owe us money, and yes, they will each have an individual account.
Like a doctor's office does.
Exactly. And then the total of all these individual people should match what we have in our total of our accounts receivable, big accounts receivable account in our general ledger. Okay, so guess what the other one is?
Accounts payable.
Accounts payable. Right, we have to have the same thing with them, don't we? We gotta know who we have to pay and how much we owe, and keep up with how much we pay, how much we charge, so that when they send us a statement, we can look and be sure that the statement's correct, for one thing, and it reminds us to pay. Now, and this is very important, in most accounting, larger companies, you have one person who handles nothing but accounts payable. That's it. They handle all the accounts payable portion of the accounting department. One person handles accounts receivable. It sees if they make collections, they put the money in, they send the statements out, right? Okay.
Another thing that could accomplish is if you know how much your creditors owe you, and figure out how much you owe other creditors.
Exactly.
You know, if you hurry up and get the money back from people that owe you, you could possibly pay the creditors from.
Exactly. And that's one of the reasons we talk about that cash flow, and we'll talk about some things that we do that companies do to try to get you to pay quicker. They'll offer you a little discount if you pay sooner. And it's because they want that cash coming in. They want cash coming in so they can pay their bills and the people that they owe, right? Okay, so let's go. We're going to look at the chart of accounts, which has changed a little bit now. It's on page whatever in your book.
191.
The chart of accounts is
191.
191. Okay.
Ours
There's a chart.
is not colored.
Y'all's is not colored?
No.
Oh, too bad. Okay.
We get this on computer, right?
Yeah, you can still numbered in the 100s, just like before. Our liabilities are still numbered in the 200s, just like before. Right? Owner's equity accounts are numbered in the 300s. Revenue accounts, we're still in the 400s. We've added a new section called Cost of Goods Sold. These now are numbered in the 500s. This is the cost. This is how we figure up all the merchandise that we have out there in the warehouse. How much it actually costs us. And we need to know that in a merchandising company because you've got to know how much the goods are that you bought. So you know what to sell for. That's right. And we include in the cost of those purchases that we make to resell the freight that it costs us to ship it in. That's part of the cost, right? We're going to pass that on to the customer, right? So we need to know how much we pay for it, how much freight. That's added to the cost. If anything's been returned, we're going to take that out because it's not returned, or we may have given an allowance on it, meaning there might have been something wrong with it. We said, okay, take off $10. We go in there and make that adjustment. And we also may give them a discount for buying in quantity or paying quickly, right? So 500s are going to be our cost of our goods sold section. And now all our expenses will be labeled in the 600s. Okay, so we still use our numbering system. We just have another section to use to deal with. Okay. General journal and general ledger. Let's look at what would have happened if we didn't have what we call a special journal. If you had all these entries and all these sales, you'd have a whole bunch of entries to make, wouldn't you? Each sale, a whole bunch of things to post. Yes, for each one, you'd have to post each individual part of that sale. Right? Okay. The accounts receivable total, then the amount of sales tax that we collected from the customer, and the amount of the purchase. So the purpose, and this is simply to point out the purpose, same thing with the general ledger. You got to post to all those accounts. Those few sales would require 16, 17 different entries. If we did it same way we've been doing it. Bunch of postings, bunch of entries. All right. Now, since we choose to use special journals, you can use a special journal for whatever you need one for. And you can set up your costs to fit your business. The point is to save time, reduce the number of entries that have to be made, and the number of postings that have to be done. To save time and energy and employee time, employee work. So what we do is we set up a sales journal. Now this one shows the date, the sales slip number. To go in and buy something, usually get a sales slip or a receipt or something that shows the sale on it. And in our journal, since we're selling the merchandise, we're going to put the sales slip number, going to be from our stack of sales papers, invoices, or whatever you want to call it, that we're filling out as people buy stuff. And as they buy it, we put the sales slip number. These must be pre-numbered so that we can keep up with them, so that they don't get loose and somebody use it and sell something and take the money themselves and not put it in the cash register. So these have to show up sequentially, right? Then we have the customer's name. Then we have accounts receivable. How much was the total amount that they're going to have to pay us? This is the amount that they owe us, $702. And included in that $702 was the sales tax that we collected, $52. When we collect sales tax, we can't keep that money. That's not money that we keep or that we can use as an income, it has to go to the state, right? We keep up with it, yes, but it gets sent out to the state or to the government every 3 months or every how some people are set up to have to prepay it. But your sales tax and then the amount of your sale is the amount you charge for the merchandise, right? Okay. You should have a picture of this in your book. Showing us exactly. Well, we'll get past that.
Page 193.
193. Okay. All right, so what we're doing is we're taking each of our sales slips and we're going to record each sale as it comes through in our sales journal. Again, you've got a page number in your sales journal, and as the sales come through each day, we record them. Record them in this journal. Okay, which is nice, because it's just one line. We record everything about that sale on one line in one journal, right? Okay. And we put the date, we put the invoice or sales slip number, name of our customer, which we should, in a minute I'll show you, we're going to have a little place to, where we keep up with that customer. And then we put the details about the sale, the merchandise amount, which is the sales credit, sales tax, which we have to collect but we can't keep, but we have to collect it, and then the total amount they've got to pay us. All right. Make sense? So let's just look at 1 month's worth. So here's our sales slip. We'll always check to be sure that all of them are there, right? Because it can happen, correct?
Yep.
People can, somebody's standing there at the sales, they make a sale and this person hands them, doing whatever, and they just don't record it. Or wait for them to pay it and then collect the money or whatever. But we've got to be careful, very careful about who we have in charge of, right? Paying things, keeping up with the money. You don't want the same person keeping up with this that keeps up with when the people pay, right? Because they could do just what you said. Right? No kidding. I mean, it's been done. I can give you some examples, but that's one of the biggest things. And accountants are responsible for watching the money flow and being sure that people are assigned the same a job that would overlap to where they had the opportunity. Yeah, it definitely happened there, didn't it? It happened more than once. Yeah,
that was just
that was one that he just walked out with.
Yeah, he'd been cooking the books for a while.
Yeah.
And then they started to look at him, and that's
Oh, they didn't even know.
he's in jail for murder now.
Yeah.
But
They looked at him. He knew he was probably going to
yeah,
get caught.
he was
Yeah.
he was cooking the books, and they started looking around, and he went, oh, a bunch of cash, run away.
Yeah. And he got killed.
And
They
he
found
was
him in
killed.
Florida and boat's dead.
No, he's alive. Yeah,
Oh, he was alive?
everybody on the
No, it
boat.
was the other people that were dead. He
He
caught.
killed a bunch of people.
I guess
I missed that.
I guess he's in jail.
Yeah, he's in jail in Florida.
I remember seeing him. I recognized him. Yeah, Florida. Okay, let's look at it. When with the sales journal, then it's not necessary to post as you're going daily, right? To the general ledger, because we don't have to do that. We're keeping up with it on one sheet, so it doesn't go every time to accounts receivable in the general ledger. What we do is instead, as we get our sales in and on our sales journal, you noticed each person's name was there. What we do is, though, daily, every day, the one thing we do post is to Ann's account. We go to her account, pull a check mark, find her account. We don't post it here, right? It doesn't get posted here. These daily get posted to those individuals' accounts over there. Each person has a little sheet on them, and we keep up with what they buy. They don't pay us cash. Okay. Now, at the end of the month, end of the month. See, normally, if we were doing this in the general ledger, we'd be posting all this stuff to the general ledger data with every sale. But since we're not doing that, we're using the sales journal, we wait till the end of the month, we add up our columns, right? Add up our columns. And so then, accounts receivable debit column gets posted to the big account, like normal, the accounts receivable account, in the general ledger, and we show it end of the month, sales journal, which is now an S, representing that journal, sales journal 1. There's the total, that column, sales for this month, right? Okay, go across, keep our balance in our account updated, and we go back and show where we posted it. So that's what we do with our totals. Instead of having to post them daily to those 4 accounts, we don't do everything. We just post it at the end of the month to the big account in the general ledger. Daily, we post to each of these persons as they pay or as they buy from us. We go and put it on their account. Everybody see that? Sales journal page 1 is what we're using now as our reference. Those are totals. Okay. Same thing with each one of your columns. We've already talked about these advantages. You can read it. That's your advantages of your sales journal. The only thing we're going to do, tell you what I'd like for you to do. I'd like for you to take the time to go back. Well, let me go ahead and follow this up. Let's look at some of the exercises, because exercise 7.1 is simply identifying where you would put something. I'd like for you to do that one, 7.1. And 7.2. Just do those 2. Those are going to get you familiar with what kind of journal, where you would put your entry. Exercise 1 and exercise 2 on page 2.